All right, I'm going to kickstart our event. Good morning, good afternoon, and good evening. Welcome to MaGESpire and ConsenSys present Understanding Central Bank Digital Currency, Risk and Opportunities. I am Bowie Lau and I'm your host today. Before we get started, we have a little disclaimer. Anything we discuss in the event today should not be construed as any form of financial advice or solicitation to invest. And before making any investment decision, please make sure you do your own research and you do your own due diligence. A quick introduction of myself. I am a woman with many faces. I run MaGESpire, which is a fintech venture development and education group in Hong Kong. On one side, I'm in the angel investment and venture capital space. I do direct angel investment into technology startups. And I'm also a partner of a venture capital fund called True Global Ventures. I also run a consultancy arm to help companies with business development, market access, and also connecting them to the right people. On the other hand, I run the MaGESpire community to conduct lots of educational talks in fintech and blockchain. And before February this year, I used to conduct all the physical events in Hong Kong and Singapore. And now, thanks to COVID-19, I kind of shift all my events to virtual only. And the good thing is that I get to invite anyone that I know globally, around the world. And for this particular event, I personally invited lots of friends and acquaintances to join. And I'm very happy to see many of you online. And 2 weeks ago, I helped conducting a Cantonese session on central bank digital currency for the FinTech Association of Hong Kong. And people have been requesting me, hey, you cannot just do it with Cantonese. We want to do it. They don't understand and they wanted to understand a little bit more. So here we are. I'm very happy that we're having an English version for CBDC today. And I'm very excited to co-organize this with ConsenSys, a very well-known leader in the blockchain space, for the event today. And central bank digital currency continue to be a very popular topic of discussion within the broader financial circle. And with China often dominating the headline owing to the progress of its planned digital yuan project. And today I have the privilege and honor to have in-depth conversations with lots of seasoned speakers on CBDC today. And the event agenda for today is very simple. We have a small keynote and jump straight to a very exciting panel discussion on CBDC. And without further ado, I'd like to introduce my first speaker, Mr. Charles Duzy, Director from ConsenSys, to talk about what CBDC, DCEP, and stablecoin means for the future of money. All to you now, Charles. Lacey.
Thank you so much, Bowie. I'm going to share my screen. Is that okay?
Okay.
That would be great.
1 second.
And we'll be started in just a few seconds.
Yeah, 1 second. See if I can make you a host. Are you able to do that, or?
I cannot do screen sharing yet.
Yeah, I just make you a host, so you should be able to see that now.
Yeah, fantastic. Thank you so much. So, Bowie, thank you so much for having us today. It's great to co-organize this event. Welcome to all attendees. Very much looking forward to the panel just after this short presentation. Bowie, you gave me a very big challenge. Is talking about CBDC, DCEP, and stablecoin in 10 minutes. That's almost impossible, but I took the challenge anyway. So I'm going to be very brief. I guess it's going to give a little bit of flavor and a few components for the conversation right after this presentation. So as I mentioned, we're going to try to have a look at what is a CBDC, what is a DCEP, the stable coins and the key factor of success. And I will give you a short overview of how we we build CBDCs on Ethereum, which is the technology we are focusing on at ConsenSys. So the money is about to change again. The money has been existing in the form of grain of salt, in gold, in paper, credit cards, digital money, and now there is CBDCs coming up in the conversation. So it's really a topic which is ongoing and super exciting. When you look at CBDCs today, there is essentially two main topics for central banks when they look at the CBDC opportunity. Is looking at enabling wholesale payments between the central banks and the commercial banks, but also looking at how they can enable more efficient retail payments. So CBDCs, as you look at them today, and there is a lot of central banks working on this topic right now, they want to make central banks money accessible to a much larger range of people, including the general public. And they want to make sure that this digital central bank currency is also a useful means of payment, a legal tender, as well as a safe store of value. And what we probably expect from the CBDCs in the coming years is to also enable cheap and secure real-time transfer of value. Today, you can still move money between banks, but sometimes there is cost associated with that. And also enabling the move of money without necessarily having a bank account, which will be really much supporting all the financial inclusion missions which people are working on. And also we probably all hope that this digital currency will be built on open infrastructure so that all the competition and all the innovation can be fostered and really enabling the ecosystem where this currency is available. As per today, we estimate about 80% of the central banks are engaged in some kind of work around CBDCs. So this map is really giving you a very broad overview, but essentially 80% of central banks are working on this topic. And what will be also fantastic if we look at CBDCs only is to look at how we could potentially have in some time some common works or some common initiatives within the different banks. What we see right now is a lot of experimentations in different technologies with different outcomes, with different goals as well from central banks when they work on CBDCs. But essentially, we all hope in the industry that there will be some commonalities and there will be some joint platform so that these CBDCs will really enable a totally new value in the ecosystem overall. I'm switching gears right now to tell you about the DCEP. So the DCEP is the central bank's digital currency initiative from the People's Bank of China. And DCEP, for the one who don't know, is actually a 6 years old concept. So the Bank of China has been very much on the edge of this topic, and DCEP stands for Digital Currency and Electronic Payment. So that's the term they use in mainland China. And essentially this DCEP was born to replace what we call M0. M0 is the cash in circulation issued by the central banks. And there is an interesting architecture with this DCEP. It's essentially offering some kind of loosely coupled account links so that you can do transfers between bank accounts, you can do transfer between different wallets. These wallets might not be linked to bank accounts, and you can also do transfers when between wallets which are not connected to the internet. So there is some very interesting features which are available in this DCEP experimentation from the Central Bank of China. And there is a strong concept in the architecture without going into too much details. It's a concept of one coin, two addresses, and three centers. And it really gives you, within these few words, another view of the overall architecture and the vision of the PBOC with their CBDC. Looking at what coin, obviously this is the Chinese yuan, the DCEP, two addresses which are the People's Bank of China, but as well as a commercial bank. So there is within the architecture a link between the central bank and the commercial banks. And three centers stands for an identification center, which is essentially taking care of the KYC, a record center to make sure that the different ledgers Should they be from the central banks, the commercial banks, or some other entity? Interconnected as well as updated between one another. And there is also a big data analytics center which is looking at understanding all these transactions and bringing value out of all of these. And the beauty of the concept so far, this is an ever evolving concept, is that all this CBDC from the Central Bank of China is not yet involving any blockchain. You can basically settle transactions of this CBDC on blockchain, but it's not per se a blockchain-based CBDC. And the last type of CBDCs or kind of stable coins we are seeing on the market, these are the privately owned CBDCs. So they are initiated by private companies. They are backed partially or totally by fiat in bank accounts, and they are essentially minting US dollar mostly for the moment within blockchain, mostly on the Ethereum blockchain. So you look at Tether, for example, at 10 billion US dollar market cap, and massive volumes for most of these privately owned CBDCs. So when you look at the CBDC race right now, many people are doing experimentation, and what is surfacing from all this research from different central banks and government or para-government entities is 3 key success factors. The first one is very obvious, but it's sometimes very hard to capture, is making sure you identify and design your CBDC for truly adding value use cases. There is obviously capital market use cases for CBDCs, trade finance. We've seen them in Hong Kong and some other jurisdictions. Insurance, media, salaries, payment. There is multiple use cases, and you want to find the right one for your experimentations and development. There is also a big topic on global compatibility. We see a lot of silos being repeated in this CBDC works, and eventually the CBDCs and the mediums which will have success are the one which can enable market reach, reaching to customers, reaching to SMEs, and also this reach will enable some network effect. And there is a risk that some CBDC experimentation will remain within silos and bring only a small amount of value, and probably kind of fade out soon after being launched. In the context of this kind of bilateral tension and discussions right now, what we feel is there is a very strong need also of very neutral technology platforms. We see part of the world getting into more hot discussions, and eventually when this central bank digital currency will move across different regions, they will probably be much more comfortable as well as much more successful if the platform being used is felt by both parties and all parties participant on the platform as a technology which is truly neutral and truly decentralized. No one wants to be dealing too much on the platform of some of your competitors, for example, is not going to be creating the trust you might need. And also the last component, but very important, is the systematic and cheap compliance functionalities. CBDCs does not mean that you enter a world of fun and total freedom. The compliance, the KYC, AML, and all the regulation put it in place by FATF are very important. And when CBDCs will enable this systemic compliance, it will really bring some additional value. How do we build CBDCs on Ethereum? I'll be very brief here. Ethereum is the world's largest blockchain ecosystem with more than 300,000 developers. About 95% of the token launches and CBDC today, stablecoins are launched on Ethereum. So it really allows any players to gain immediately some network effects and benefit from this. ConsenSys has been very active in central banks, digital currencies. We published during the World Economic Forum in Davos earlier this year a white paper which we are happy to share with you. There's the opportunity. And we've been also very active for some years with central banks, should it be with wholesale payment use cases or retail payment use cases. So the South African Reserve Bank, ZMAS in Singapore, Union Bank in the Philippines, as well as some payment and blockchain payment-based startups. So today we are discussing with many different players looking at expanding their payment and digital payment infrastructure at architecture based on Ethereum, where you can essentially build a private network where you can guarantee the privacy and the performance in terms of transaction per second, as well as a connectivity to a permission Ethereum network where you get a connectivity with the central banks, commercial banks, the payment service providers, KYC operators, retailers. So there is really some smart ways to design your network in order to get the best of this blockchain and CBDC opportunities. Last word about ConsenSys. We are 500 plus experts in blockchain, dispatched in more than 30 countries. We've been tokenizing about $1 billion of assets. The infrastructure we are maintaining today within our customers' platforms is managing about 10 billion queries every day. So we are really in the operations of this industry from the early days. I think our references and logos here are talking for themselves. So we are dealing with government, regulators, global banks, European commissions, and many other private sector companies. So you see here some of the interfaces we built when it comes to CBDC management, making sure we can manage liquidity between the different players, as well as the different retail users and wallets. I'll stop here. Very much looking forward to conversations. If you are looking at digital asset, at digital payment and CBDCs, we have a team here in Hong Kong, but we are also in Singapore, Australia, and Japan. Feel free to find us on LinkedIn, or we have the email here also. Thank you so much, Bowie, for the opportunity. I look forward to the conversation with our panelists just right now.
Absolutely. Thank you so much, Charles. And are you able to put me back as a host so that I can share screen?
Yes, I can do that.
My name.
You are now the boss.
All right, let's see. 1 second. Yeah. So thank you so much, Charles, for a quick keynote. So now we are you able to see the screen?
Yes.
Yeah, okay, good. So now we jump straight to the exciting panel discussion on this topic. And while I'm fixing the screen, I like to introduce our speakers. First one, I have Mr. Donald Lacey, Managing Director and Chief Operating Officer from Pingan Global Voyager Fund. And I have Charles Ducey, Director from ConsenSys. And I have Mr. Pádraig Walsh, partner from Tencent Witt. And also Mr. Tim Leung, Director and Product and Technology Director at Tencent. So before we get started, I think we should get to know who you are and what you do. So why don't we start with Donald and have a quick introduction of yourself and we go around.
Sure, thank you, Bowie. And I think this is going to be a really interesting and exciting discussion. I thank you for putting it together. And Charles, that was an excellent introduction to a topic I think we really ought to be talking a whole lot about. I think we ought to be really, really excited by it. My name is Don Lacey. I work at a fintech and health tech fund that was set up by Pingan a few years ago. We invest in fintech and health tech companies, usually at what we call the growth stage of those companies' existence. So not very early stage investing. And we have a bit of a bias toward platform stories to B2B fintech infrastructure stories. We've put about $350 million to work across about 13 different investments. I also serve as the chairman of the European Fintech Company Builder Finley.
Thank you, Donald. And Charles, I thank you for a quick keynote, but I think everybody in Hong Kong know about you, but the rest of the world might not know. So why don't you introduce yourself, what you do?
Absolutely. So thank you very much, Bowie. So my name is Charles Diossi. I am the director of ConsenSys Hong Kong. I also act as a director for business development and partnership for Asia Pacific. So I lead the team of ConsenSys in Hong Kong, Singapore, Australia, and Japan. Before joining ConsenSys, I was head of fintech with the Hong Kong government at Invest Hong Kong. So I was very instrumental with my team at the time, together with many stakeholders, including you, Bowie, into shaping from the early days the fintech ecosystem here in Hong Kong. So my team at Invest Hong Kong was in charge of organizing the FinTech Week. So we grew the FinTech Week from 2,000 attendees to 10,000 attendees last year. And over my stay at the Hong Kong government, I've been servicing about 450 different fintech companies from mainland China, Europe, and US, joining the fintech ecosystem in Hong Kong in fields such as insurtech, AI, blockchain, obviously, as well as many other topics.
That's great. And Pádraig, your turn.
Hi, so yes, Pádraig Walsh. I'm a partner in the corporate team here in Tanner DeWitt, which is an independent Hong Kong law firm. I particularly cover the technology sector, so technology in all its stripes and colors. And of course, blockchain technology and related issues are a key part of that. I've been working in Hong Kong for more than 20 years, living here, gosh, maybe around 35 years at this stage. So a long-time person in Hong Kong, focusing on technology-related legal work.
Thank you, Pádraig. And team, are you here?
Yes, I'm here. Thank you, guys, and thank you for having me. My name is Leung. I work in Tencent right now in our fintech group. I have focused on our provision of fintech technology.
Are you able to speak a little louder?
Oh, sorry. My name is Leung. I work in Tencent fintech group. I have worked on our fintech technology as a provision as cloud service to financial institutions in China, across China, and currently also driving AI technology in use cases in fintech. I'm not always a fintech person. I joined this before, after there's such a term as fintech, so this shouldn't be too old in this field, because that's a new term. But I've been working on other internet products and search technology and other software in my career. So I'm interested in blockchain and this topic of CBDC. So I'm very honored to join everyone here. Thank you.
Thank you, team. And I also know that you're a board of director of FinTech Association of Hong Kong. So if anyone is interested, feel free to reach out myself or team to get to know about the association. So let's jump straight to the question. So Donald, with the latest CBDC development in mainland China, what are the potential opportunities for healthcare and also financial services providers?
Thank you, Bowie. I guess, you know what, I'm going to answer that question. But before I do, it's something we talked about earlier. Is I'd like to take a little bit of a step back and emphasize to everyone on this discussion how really, really important this topic is. We do a whole lot of fintech panels, and Charles and Tim and Pádraig, we're all on fintech panels all the time, and at least for myself, very often we're talking about things like pet insurance is being sold online. What are the repercussions of this? I have a very strong view that the topic, Bowie, that you selected for today, when we look back 10 years from now and we ask, what was the big topic? What was the big thing that changed? What was really, really important? I think it's this. I don't think it's selling pet insurance online. I don't think it's I don't think it's a lot of the other fintech topics that oftentimes consume a lot of oxygen in the room. I think it is absolutely this. And I think that so often we sometimes get down into the weeds of a discussion of how exactly would we put together a working cryptocurrency that would be widely accessible, that we don't consider the ramifications of what we're doing. And I think it's hugely important for everyone to have all of this stuff in mind. And one of my favorite economists, a guy named Rudy Dornbush, said, so in economics, sometimes things take much longer to happen than you think they will, and then they happen way faster than you ever thought they could. And I think we're going to see that with digital currencies. So, the starting point for this, I think something that we all kind of intuitively understand, Charles talked a little bit about it already, is that if we were designing a currency from scratch in the year 2020, there's no way at all that we'd come up with the system that we currently have. If you just think about the attributes of physical currency, there are all kinds of quite obvious problems with them. There's the physical inconvenience of having to walk around with cash. There is now something we think a lot about, the public health ramification of handing pieces of paper back and forth to one another. We never used to think about that. Nowadays, we think about that a lot. There's the role of cash in the underground economy and all of the social ills that engenders. And then there is the deadweight loss of seigniorage, when we take cash and we don't actually do anything with it, but sort of store it for some future purpose. That's hundreds of billions of dollars that are good for the issuer of that currency, but it's a tremendous drag on systemic efficiency otherwise. And all of those problems are just the problems of physical currency, and they're significant. But when you then start thinking about how it is that we as a society move currencies around, first of all, you begin to get to the nub of a tremendously large number of fintech business models, because many of them are just about moving money back and forth, sometimes within an economy, sometimes across borders. But the point here is, when you think about the systems that we have right now for moving currencies, first point is that, and this to me is maybe why we ought to be excited about the promise of fintech. Clunky plumbing, the plumbing that you see embedded in systems like chips and Fedwire, the mechanisms whereby we move currencies today, that clunky plumbing retards economic growth and exacerbates inequality. And I mean, when I talk about inequality, I think it's a really big deal. If Pádraig is transferring $500,000 to ConsenSys in New York, from London to New York, he's going to get a great rate on that transfer. He's not really going to pay much by way of frictional cost to effect that transfer. But if you're talking about a domestic helper who's trying to transfer $70 from Hong Kong to Manila, that domestic helper, who is much less able to afford a frictional cost than Pádraig and Charles, is going to pay $10, is going to pay $7, is going to pay sometimes $20 just to do that transfer. And that's the segment of society that can least afford that kind of frictional inefficiency. And within the promise of digital currencies, there's the potential to take that frictional cost down to zero, which is, I think, tremendously seductive. I think it's a very exciting prospect. The second point is that intermediated monetary policy, where someone cuts interest rates and then the effect of that interest rate cut is supposed to be manifested through several different levels of financial intermediaries, and that only then does it get to me, the guy on the street, in terms of an effect. That's a very ineffective way to conduct monetary policy. And historically, it was the only way to do it. There wasn't any way to do it more efficiently. And it appears, when you look at the relative efficacy of central bank maneuverings over the last decade or so, this problem of monetary policy moves getting stuck at different levels of intermediation in the financial system, it appears to be getting worse for a variety of different reasons. If you imagine, and this is not what is imagined currently in China to my knowledge, but if you can imagine a central bank currency system, a digital currency system, wherein every man and woman in a society has a ledger, has an account at a central bank. And that opens up a tremendously, an amazing new vista of different ways to conduct monetary policy. And, finally, it's really interesting to reflect, and people, I think, sometimes hesitate to talk about this when they talk about digital currencies because it's a sort of a second order issue. But, consider for a second, guys, that, the United States makes up about 10% of world trade volumes. It makes up about 15% of global GDP. But the US dollar makes up 50% of global trade invoices. It makes up 2/3 of all central bank foreign exchange reserves, and it makes up 2/3 of all global securities currently issued. And so that fact of dollar dominance in the international financial system, and the fact of trade invoicing and securities issuance kind of operating in a reinforcing cycle, what that means is that the effects of US monetary policy are amplified in ways that are oftentimes inconsistent with what you might consider to be systemically efficient approaches to monetary policy. And the knock-on effect of that, which we all see, is that it forces smaller economies all around the world to hold significant dollar reserves that then have the knock-on effect of depressing US dollar interest rates. And then that has the knock-on effect of retarding the global natural growth rate. It also has the effect of exacerbating bubbles in dollar-denominated securities exchanges all around the world. And it's when you think about the opportunities of central bank digital currencies and what that could mean if they were implemented at scale, you see the opportunity to change all of that with one innovation. And that's a tremendously powerful thing. When you think about what it means in terms of financial institutions, it means that there are a lot of smaller transactions that heretofore were simply inefficient, were economically irrational for financial institutions to partake in, all of a sudden become fair game. On the one hand, if you have a central bank digital currency that removes certain frictional costs that financial intermediaries were the beneficiaries of, and sometimes people focus on that. But the other part of this is that it opens up this whole new vista of other things that financial institutions can do that historically it made no sense for them to do. One example would be in supply chain finance. When you look at the activities of banks like Citibank, JP Morgan, in respect of supply chain finance activities, what you find is that those banks tend to concentrate their activities in supply chain finance at the very large kind of invoice amounts. And what that means is that if you are a much smaller SME, you don't have access to supply chain financing or dynamic discounting solutions that can oftentimes reduce the amount of working capital that you have to have on hand in order to conduct your business. And one interesting knock-on effect among many is that all of a sudden it could be possible for financial institutions to serve a much broader swath of the SME community. So that's one interesting aspect. There are many others.
Thank you, Donald. So here's my next question is for Tim. Now, there are numbers of testing news for China digital yuan. We know that they launched it at Starbucks, McDonald's, and even, it gets first big test via the tech giant Didi. So what are your views on this, and what would it mean for China's mobile payment industry?
Sorry, I was muted. Yeah, I think the DCEP in China has certainly been on the retail front, on the retail usage of CBDC would be on the forefront. The reason is probably quite straightforward in the sense that first of all, the habit of using electronic payment, the EP portion of it is pretty deep rooted in China. Secondly, it is pushed by the central bank. So a top-down policy-driven types of adoption is usually quite successful or more successful than other places in China for obvious reason. So I think the fact that there are chosen test sites and scenarios that you mentioned, like Xiong'an, this new area near Beijing where everything is new. When I visited 3 years ago, they were already testing with Baidu on the self-driving car. So they wanted to build everything brand new, infrastructure-wise in that place. I mean, this is, you know, things that China can do with the way that the government and enterprises, private enterprises work together. So, so first of all, I think this will be something that would happen. I mean, I don't know if it will be widespread and if it would be replacing cash and all that, but it is pretty understood that this is something that could happen. So that's number one. Number two is we need to go back to look at the question that you're talking about, how it would impact other existing third-party payment system. I think the biggest difference is the usage at the get-go maybe for the users would feel similar, but the clear difference is this is a cash. This is a replacement for hard cash. It doesn't have to be bound to a bank account. That is different from the current way that electronic wallet is happening for the most part. So what that means is, I think potentially that could have an even broader reach because it should be easier to onboard to it. And secondly, it may mean that it would have well, maybe I'll talk about that part of impact on the bank later. But if I just want to focus on the impact on third-party payment in that sense, it kind of is a competitor, but it's also slightly different. So I guess the impact is if the usage of it is so similar to third-party payment, but it is cash and not need to be bank account bound, so it may be more widespread in the best case, which will reduce the balance in the existing third-party payment system, which is one key part of the business model of current electronic payment. So that would be a potential adverse impact on them. But that's already happening because a lot of this reserve deposit is already back to the central bank. So it's going to be a gradual process, I think, in that kind of adverse impact side of it. The beneficial side of it is potentially that whoever, I mean, the big guys that are running the third-party payment system has a lot more reach on users, a lot more scenarios of payments already established, and most likely they will be part of this reach out of DCEP into more usage scenarios. So that means the rise of the push of DCEP into retail scenario may actually turn out that central bank would have to rely on this current internet players. And at that process, I think the internet players will quickly evolve the models, maybe to become an entry point, to become a custodian, rather than using the transaction as a business model. I think that could be a way that it happens, and it could happen very fast. I guess the biggest question would then be whether the other banks that would also become agents of DCEP will use this as an advantage to come up quickly in terms of driving the user entry point, driving other user scenarios, especially for fintech scenarios where they would have more licenses and whatnot with a bigger variety of financial products that they could quickly licensed to, they are licensed to, and they could potentially quickly push to the users. So, so I think that would be something that remains to be seen. So I think there are opportunities and challenges to existing third-party payment systems, but this would happen. I think this would happen gradually, but quickly enough when it happens, meaning all the technology stuff being ironed out in the future. So, so I think if anywhere that this could happen, this should be China, because once again, like I said at the beginning, the user education is there. It will be a more transparent shift to the user, and then the government will take more control, take back the control, some would say, of the fundamental infrastructure of retail payment and transaction. It's great for them, you know. It's a lot more straight through regulatory transparency that they can see. So and you know, they could potentially use this to even strengthen the effect of monetary policy, as I think Donald also alluded to. So I think that's my answer so far.
Yeah, thank you, Tim. I agree. You know, they plan for it for 6 years. It's just a matter of time to have massive adoption, but obviously there are lots of opportunities and challenges. So he's come to my next question for Charles. So is distributed ledger technology, DLT, necessary for CBDC? And how do you think the application of digital currency technology can be expanded in Hong Kong?
So I guess the Chinese market is one more time kind of surprising us with the innovation and the imagination they have on how to develop digital currencies without using so far blockchain. So you don't need to have a blockchain to have a digital currency. That's a great achievement. Honestly, it's really amazing to look at how this is well thought, and how this gives the opportunity to deploy this CBDC on a blockchain base, but also using more centralized system. And having this choice, I think, is a very strong design choice, which will make a big success for the DCEP. I think one thing we haven't touched yet in the conversation is, and what blockchain will bring, which centralized system will not bring, is the concept of programmable money. Programmable money is a digital kind of money which blockchain can enable and other systems cannot, where you can actually decide this money will be only transactable, for example, within Hong Kong, or only transactable within, let's say, HSBC customers, or maybe only spendable on health expenses. If you are an insurance company, for example, and you want to, you receive a claim and you want the money you give to your insurees to be spent in specific topics or specific spending, you can basically use new forms of digital currencies and make this kind of programmable money. So the money will be spent only in the hospital, or the money will be spent only in, for example, for a car accident in garage or anything like this. So this concept of programmable money is only enabled by blockchain, basically. And this has very strong applications in trade finance, obviously, where you can make sure that the money is spent in the right, for the right usage, to make sure that the money is not double spent or spent in other things. In insurance, we just talked about it. You can have more security and less frauds by basically delivering money to your customer base, being directional money. But there is also a lot of applications in the world of compliance, which is a massive cost for the existing financial services industry. Thinking on how you can, for example, have a Hong Kong dollar, which can only be spent either in Hong Kong or maybe within the Greater Bay Area. And if you want to send it to a sanctioned country, you could not do it. So this programmable money is only enabled by blockchain, and I think is a very strong concept and value proposition. Will come in a second wave where we're going to see this kind of features being embedded in the coins themselves. In capital market, programmable money is a very strong play, and we start to see some signs that the private sector is looking at issuing stable coins, which are dedicated to capital market applications. And these coins come with very strong functionalities, which makes them very efficient in capital market environment. And when it comes to Hong Kong, I think we are at the beginning of the journey. We are very lucky. It's very easy to always look at the other side of the field and thinking the grass is greener elsewhere. But if we look carefully at the facts of the Hong Kong regulators and the Hong Kong ecosystem, the blockchain journey from our regulators started in 2016 with the first blockchain project between the HKMA and Bank of China Hong Kong. And since then, they've been going through different experimentation through the project Itanon with the Bank of Thailand. And I think the journey keep progressing. There is a strong appetite from the users. There is a strong appetite from the banks. There is very strong use case with the Greater Bay Area next to us, with the Asian countries, where there is a lot of cross-border opportunities. And we have a very competitive ecosystem in Hong Kong. And sometimes we forget that. And this competition brings appetite and willingness from the practitioners, the banks, the payment service providers, to basically enable and start this new innovation within their ecosystem. So when you look at the number of banks in Hong Kong, we have 170 banks or so, banks in Hong Kong, and if you compare that to some other ecosystems globally, this is an opportunity we have, because this is a highly competitive and everyone has to play his best game. So whenever these banks will be starting to engage in very concrete terms with CBDCs, you can expect some very interesting action and strong moves. So I'm very, very bullish on Hong Kong and CBDCs.
I'm very excited, for all the opportunities as well. So, but here's my next question for someone who's very expert in the privacy space. So, Pádraig, would there be any data privacy concerns in the use of CBDC?
Interesting that the word that's being used is privacy, because I think privacy is really the issue here, rather than necessarily what sometimes you might hear around personal data privacy. Yes, it is an issue, because let me frame the response in the context of how, from the user perspective, cash transactions are presently handled. You will withdraw cash from a bank, but once cash is in circulation, it's basically anonymous. So if I go and deliver, to use Donald's example, $500,000 in cash to Charles, he might be a bit surprised that the suitcase would be that large and it's coming his way. But effectively, he wouldn't, no one else would know that transaction.
Everyone is very generous with me tonight. I haven't asked anything.
No one else apart from Charles and myself would be aware of or privy to that particular transaction. It would be, to all intents and purposes, anonymous. And this is one of the things that has the potential to change. And one of the social issues and political issues that will need to be considered and worked through is the extent to which that should change. Again, drawing from a point that Donald made at the outset. If you look at the moment where those anonymous transactions actually have a social impact, and in effect, they become a black economy, and that has repercussions in terms of the fairness and equity throughout society. That's on one side of the equation. But on the other side of the equation is the expectation of individuals to have a degree of privacy around their transactions that they do that are not the business of any person who has oversight over them, and particularly any government or any public bodies. And that's the other side of the equation. And how you navigate those, that divide is going to be a significant challenge, because the capability will be there to make transactions using, whether it be digital currency or a CBDC, to make it traceable. so that you will know where transactions have occurred between, between wallets or between accounts that have moved between various wallet addresses, and to be able to eventually perhaps be able to track that back to a living individual. And that is something that I think people will grapple with. Now, if you look at some comments that have been made on this, there's been a very interesting Bank of England report that was issued around the central bank digital currencies there. One of the comments that I pulled out that I thought was quite curious was they looked at the anonymous nature of cash transactions and said that that was a function of the product. It wasn't necessarily a function or a mandate of the central bank. That the central bank doesn't have this authority that says we will only issue currency and allow managed currency transactions that will be anonymous. That's not within their mandate. That's more because the products they were working with necessitated that as an outcome. So this is an area where there is a choice. If you look at how that's going to pan out globally, I think the answer is going to be different in different places. For instance, if you look in Europe, I was in a different context earlier today. I was dealing with an issue around personal data protection and looking at the language that was in GDPR there. And they speak about the rights and freedoms of individuals. Now think of those words, the rights and freedoms. Now, if you transplant, oh, someone's recording us somewhere. If you transplant that and you look and you use those words in this part of the world, I'm not sure that you would add the words and freedoms. And you would look at the concept of rights as being something that is perhaps regulated or managed with whatever sense of, whatever society you're in or whatever political engagement you're part of within that society. So it's going to be a different answer in different places, but it is very much an issue.
Thank you, Pádraig. So here's my next question for Donald. With the emergence of digital currency, will the boundaries of traditional banks and fintech companies become blurred?
Thanks, Bowie. And the answer to the question is it's already happening. It's gonna happen more and more, irrespective of the level of take-up of central bank digital currencies. I guess that to share a little bit of kind of how we see fintechs versus traditional financial institutions at the fund that I help to look after. I guess it's very popular, I think, to kind of conceive of fintechs and traditional financial institutions as kind of these two just diametrically opposed corporeal entities that are locked in some kind of titanic winner-takes-all battle that only one side will emerge victorious from. And every now and then, at least in my line of work, it's very common to meet the fintech entrepreneur who really thinks that his mandate in life is to put JP Morgan out of business no matter what. And I guess that we don't think that is the future. We don't think that's a realistic or practical way to conceive of either today's environment or the future environment. We don't see the banks and insurance companies that you guys all know today as being swept away one day in the same way that Blockbuster Video was swept away at the hands of Netflix. We think traditional financial institutions, the names that you all know today, are going to continue to play a proximate role in national economies for a very long time to come, for a whole host of reasons. But we do, when we look at the processes that comprise those financial institutions' day-to-day operations, we see a collection of idiosyncratic, definitely not cloud native, badly integrated after lots and lots of acquisitions over sometimes hundreds of years, bespoke processes that are inefficient, generally not very effectively auditable, and give rise to a lot of risks and inefficiencies in each financial institution. And I guess that we are believers in what we call the platformization much of fintech infrastructure. And the vision behind that is that we're on the cusp of what you might call kind of the AWS moment, the Amazon Web Services moment, for lots of different processes that comprise in their totality the functional stack of a traditional financial institution. So in our vision of the future at our fund, no longer will each bank have a bespoke kind of clunky process that sits on a mainframe somewhere for originating and then maybe selling on a mortgage. That will be a process that resides in the cloud. It'll be a process that financial institution accesses in the cloud on some kind of a software as a service sort of model. So that's kind of how we think about the future. And if you think about the future that way, you stop thinking about clean lines between fintechs and banks. You start thinking more about banks and fintechs working hand in hand to solve different pain points that are universal to banks, to insurance companies, to securities firms, to asset managers. So that's kind of how we think about it. So we see a lot of blurring already. I guess that, you know, if you want to think about what Charles was pointing to earlier, he did a really nice job of walking us through programmable money, which is one of these kind of, you know, second order things that you get to think about when you start imagining a world of central bank digital currencies. And he is 100% right. There's all this new stuff you can imagine in trade finance, in insurance, in healthcare, in sanctions and compliance. The list goes on. He's totally right. And I guess that, you know, the only trouble with all of this is that if you think about, you know, just imagine most fintechs that you know. I'm not going to name them. You've all got your lists. If you think about at the core what most of those fintech business models are, they are generally aimed at exploiting and moderately reducing different frictional costs that are inherent in our current system of like global financial plumbing, sometimes at a retail level, sometimes on a cross-border level, sometimes at an institutional level, but that's the theme. What we might call in this conversation a frictional cost that fintech sees as its profit pool, basically. And I think that one real issue with central bank digital currencies and one issue with things like programmable money is that, you know, they will be so effective, in my view, at mitigating existing frictional costs and taking those costs down to almost zero, that I think you may wind up inadvertently collapsing a whole host of different fintech business models out there. You're not going to get rid of all of them, but, you know, if I just started a company and my whole proposition to you, Bowie, is that I've got a new way of efficiently transferring money across borders. You know, Charles's new central bank digital currency is going to vaporize my business model. So I think you will see some of that. You're definitely going to see a blurring of lines as well.
Absolutely, I totally agree. So Charles, I'm curious about your company. What is ConsenSys position around CBDC now and also in the future?
It's at the core of our engagement with different customers. So ConsenSys, we are essentially a B2B blockchain engineering company. So we are working with banks, central banks, people from the financial industry in general, and looking at their business model, looking at their infrastructure, and helping them to build digital asset or blockchain primitive infrastructure to enable more proposition or efficiencies within their business. And CBDCs is a topic which is a very hot topic right now everywhere, and ConsenSys is involved in many conversations globally with people building infrastructure, with central banks issuing or looking at issuing central bank digital currencies, and people looking at doing new finance. I think when we look at CBDCs, this is the very early stage of the kind of the first steps of the cycle of money and the value chain of money when you issue money from a central bank. And if you can issue money which is possibly a programmable money or a blockchain-based money with all the functionalities you can imagine, later down the road, you enable a lot of different financial institutions and financial players. So you can think of the payment players, you can think of the people in capital market, in trade finance, And these are the topics which keep us the most active right now. And then when you look at the different groups within ConsenSys, we have also a small part, but growing part of our clientele, which is looking at what we call DeFi. DeFi stands for decentralized finance. And these startups, usually these are small groups and very young companies, really on the edge of finance, experimenting a lot of new ways to do lending, a lot of new ways to do margin investments, and look at enabling many different new mechanisms in the derivative industry, for example. And a lot of these new companies are starting their decentralized finance value proposition out of stablecoins, and maybe later they're going to be also enabling CBDCs later on. So we have the chance really to be exposed to a very large variety of projects, and we always approach this project with our core competencies, which are engineering, where we come with our engineering and delivering capabilities, but more importantly, the portfolio of products that we have at ConsenSys, which really enables us to bring a low layers infrastructure, middle layer software, and looking also at the application layer. So it's extremely exciting and extremely dense. I think the beauty of this industry and the conversation we are all part of right now in our different capacities is we look at the technology, but it's always essentially in an industry or a market conversation. You cannot be relevant with a blockchain proposition in the bond industry if you don't understand the bond workflow and the bond friction points and the bond stakeholders. It's useless for you to look at CBDCs if you don't understand payments at retail levels or within interbanks, or the relationship of payment, wholesale payment between central banks and commercial banks. So it's very intense and really passionate to work on this topic, because you have to deep dive into the life and verticals of so many different practitioners in finance. So it's super exciting.
Thank you, Charles. Here's two questions for Pádraig. What are other legal concerns on CBDC? That's one. Another question is, what questions are policymakers asking about the technology and also the future of banking?
Well, dealing with the legal considerations, because that's more my wheelhouse than policy of the future of banking. But dealing with legal considerations, I think some of the areas that people will need to pick their way through, and this is looking at things on a global level, it will be things like whether or not the current legislation that gives the statutory powers and authority to central banks needs to be tweaked in some way in order to facilitate central bank digital currency to be issued, to be created and issued, and what kinds of changes might be needed and what kind of regulatory framework would follow from that. That would be one of the things that will just need to be looked at and adopted as on a country by country basis. There isn't going to be a single answer for all. Another issue, and then this is also dealing with the regulatory issues, would be what system or what approach to regulation will be adopted, because it is going to be quite a transformative technology and use of technology insofar as central banks are concerned. And traditionally, central banks have operated within a rather narrow frame of operation, and then have worked their policy and the implementation of their policy through other regulators, through banking regulators and other systemic regulators across the economy. Now, that will also need to be looked at and modified. I can't imagine that there would be a system where you would have direct regulation by a central bank right down to practically a retail level. That's highly unlikely. What is much more likely is to pick up on one of the slides that Charles showed in terms of potential business models, where you will have layers of regulated entities, and the user or retail or commercial business would take out a wallet or an account, call it what you will, with that particular regulated entity. and the regulation of the central bank would then act through traditional channels, but in a modified form. So the regulatory framework would need to be looked at. There would be a need for AML and KYC, and that again would likely be done at a regulated level of either the PSP or a commercial bank, if a commercial bank is operating in this particular space also. Within that, the answer may be there in relation to this balance between privacy and traceability, because what you would be able to achieve would be that the identity of the wallet holder would be known to somebody. And if that somebody happens to be a regulated body, then that is a way of perhaps separating out and keeping a degree of privacy between the regulated body and an organ of government or an organ of state, such as a central bank or a regulator, with rights of access of that regulator if the circumstances required it, maybe because there is some nefarious activity, some criminal activity that needed to be explored. So that area of AML, KYC, and regulatory framework, these are all issues to be worked through. One other topic just to touch on, and that is in relation to cybersecurity. What you can imagine is that if you've got a system that is entirely technologically based, that's a big, massive target for people who would like to take a target like that down. So you can imagine that there will be a lot of effort placed on ensuring that there will be proper cybersecurity measures in place, particularly because the potential repercussions would be so much more significant, given that there would be intended to be widespread adoption of digital money also. So those are some of the legal issues. I think beyond, actually, if you don't mind, simply because it's I'm not so politically inclined, I might defer to others in relation to any public policy considerations that might go with it.
Okay, fair enough.
If I can complete also the contribution from Pádraig, which is really spot on. There is one thing, and it just came to my mind when Pádraig mentioned the KYC and AML. There is this kind of new concept which is also supporting CBDCs and stablecoins in general, is what we call KYT, and KYT stands for Know Your Transaction. And this is really a very strong and kind of new capability for people from the compliance department. Today, when you've got transactions within the banking system globally, which you feel is not exactly pure, it's going to take you days, if not weeks, to trace back and contact the different banks, and it's very heavy and expensive things to run and to make sure that the money coming to your bank account is actually free of any troubles. And this KYT concept is enabled by blockchain. So CBDCs, which will be living on blockchain, will also enable not only actively with stable coins, which will come with programmable, but there will be also a much easier and cheaper KYC and AML being enabled by the fact that the ledger is transparent and you can analyze and very, very quickly understand where is the money coming from, what is the history of this money, and make sure that all the ecosystems remains as healthy as possible.
Thank you, Charles.
Curiously, many people think blockchain is good for bad activities and whatever kind of traffic. But for compliance officers, any transaction on the blockchain is basically a gift. It's super easy to track anything and understand the full history of the asset, the full history of the transaction. So that's also a very strong argument for moving faster to blockchain-enabled currencies.
Yeah, I agree. You know, transparency and also the immutable factors are very important for transactions. So the KYT is definitely very important going forward, especially if we want to combine the DLT and CBDC together. My next question is for team.
I've heard of, oh, sorry, I beg your pardon. I've heard of compliance officers referring it as pre-compliance, that the compliance is already baked into the system. So in that sense, I mean, this is one of the aspects where the traceability actually has a positive function, that if there is bad activity, you have the ability to follow the trail a lot easier than what would otherwise be a difficult situation if you're dealing with cash that gets transformed into other things.
Yes, I guess criminal needs to be a little bit more smarter going forward. Yeah, next question is for team. How would digital dollar work within the current banking system? And what are the opportunity and risk? Team?
Sorry, I was muted again.
I need you to speak louder, please.
Okay, sure. Since it's my turn to speak, I actually wanted to, before answering, getting back to your question just now, is to continue on that topic about compliance and public policy. And I wanted to tie back what Pádraig and Charles just mentioned in that topic with what I talked about DCEP earlier. You know, essentially, thanks Charles for bringing up this concept of KYT, right? So essentially, this is something that is quite enabled in China between WeChat Pay and Alipay. Over the years, these two systems, at least you get like 40% of the retail transactions in it. And there's been a lot of work that has been done in AML side on anti-fraud, and there is a lot of these types of criminal circle that uses this to transfer money, right, for various reasons. There was one very famous example a few years ago that was about a kind of pyramid scheme-ish type of scam that actually trick people into donating money for a charity purpose, but it's actually a scam. So a lot of these things happen through the payment system, and you know, with the right set of technology, you can monitor all of this stuff, and you can use a graph to really find out who is like the 100 or so people that's at the core of this kind of scheme. So that was a pretty big thing that that was already happening, that has already been happening in these two biggest electronic payment system in China. So with DCEP, I absolutely agree that you could, you know, or any other CBDC, this is already baked in. You know, you already be able to see all the transactions. Like for example, DCEP, the design is that central bank can see all of these transactions. They can see all of the individual persons. It's just that it's anonymous on the interface, on the endpoint. The central bank will retain the privilege to be able to see this for regulatory purpose. So of course, you know, this is something that you could do in China pretty easily. But it has this you know, privacy concern, but at the same time it has this convenience for AML and other regulatory purpose. So then I wanted to go back to Bowie's question about, in general, I guess the question is, what is the implication on banking? I think we look at all these different jurisdictions around the world doing CBDC is kind of exciting, because it's kind of like all the central banks in the world are becoming startups, and they are all endorsing and embracing new technology to try out different things. And if you see all the different countries that are potentially coming up with something or have already come up with something, there's really all over the place, all over the map. And in general, I think you can look at it as a wholesale camp versus a retail camp. Like wholesale camp is like what Hong Kong MA is doing. I think someone mentioned the Infinon project by the Bank of Thailand as well. And they are collaborating on this strictly on the wholesale level, right, between Hong Kong and Thailand using this Nine-Rock Internet corridor as a test case on using central bank digital currency for settlement. I think Singapore's project is positioned similarly. And then there's the retail camp, right? So I think the retail camp would be a lot harder because first of all, it involved user adoption. Second of all, it has a potential implication on whether this become too big of a replacement for account-based transaction, which is where your kind of monetary systems multiplier comes from, right? You use that to create loans, and it kind of translates into M1 and M2 and all that. But potentially, you know, if this CBDC is just cash replacement, and it kills that effect. It doesn't have the effect. If it draws too much of the financial transactions into it, then it may have an impact on monetary policy. That's kind of you can theoretize it, but it's kind of a pretty big unknown. So I would think that any central bank would be very cautious on that. And even in China, you can see that's why the earlier question, you see only some test sites first of all. But in general, I think if that happens, banks would be well positioned because kind of like in China, the two-tier systems to do DCEP, the banks will become the authorized agency because they have already been, you know, this two-tier system in the existing financial system. So the banks will be well positioned to directly on behalf of central bank to interact with users on this latest fintech technology to drive a new way of electronic payment. So that kind of brings them into a more level playing field with the fintech. But so having said that, I come back to the wholesale cap. I think that should be something that would, in the near term, more viable to happen in a real commercial, meaningful way, and that impact may go more towards the traditional offshore account way of clearance and settlement. May have some impact on existing legacy system, SWIFT and whatnot. But it surely will be a coexist in a certain types of maybe trade finance, somebody mentioned it earlier, kind of scenario. And then ways for people to start discovering and maybe developing more smartness, right, into it to leverage the DLT technology to really start building it up. But I think in general, the fact that every jurisdiction central bank is kind of like, you know, raising in this kind of startup mode to kind of try out different models using this is very exciting. It is, even if not with those exact material impact on the financial system that I just mentioned, it will have some knock-on effects onto the private sector to learn from this kind of larger scale experiments and maybe come up with a new way of using blockchain and crypto in other format or fashion. Yeah. All right.
Thank you, team. Yeah, so that's wrap up for all the questions I have, and I thank you everyone for joining me. And I have a couple questions here already. Thanks, Shelley. You have two questions here. So, will China test in CBDC in certain city like New Capital before it will test in the Winter Olympics as some indication in the past? That's one question. And the second question is, what business will be replaced by CBDC and impacted positively sectors? So I open up to all the panelists. Anyone would like to jump in and answer these questions?
So I'm not sure what Shelley means by the new capital. But
Shelley, are you able to clarify?
I'm talking about Xiong'an. That's the new capital. You mentioned it earlier also.
Oh yeah. Oh, okay. It's not really. Oh yeah. It's
Well, administrative wise, it will be. The settlements will be done there.
okay. Sure. I mean, I think they are testing some stuff in Suzhou and I mean Xiong'an, like I mentioned earlier, certainly everybody will put the latest kind of infrastructure-wise kind of new technology into it. They've been looking into blockchain for a long time. There's no questions that they will be tested in places like this. The impact to the existing legacy infrastructure is minimal as well in a brand new place that get kind of grow up from nothing. So I think the selection of different test cases and places are quite intentional, right? You got some these retail types of testing in this place because it is really, there's not many people there, so the impact is negligible. But then you would have some other types of testing, such as like more on a corporate level in terms of kind of compensation paid to employees, I believe, in some other places. So I think the central bank is certainly trying to check out different scenarios in different places and kind of spread them out and then give certain banks, probably the major banks, the 4 major banks, testing on the 2-tier system as well and trying to cover all bases. So I think it's all planned. It's all planned, and they will move very cautiously, but quite quickly, I believe.
Thank you, team. Anyone would like to add on Shelley's question? If not, then Shakruti, I heard that you have a question. Would you like to speak up?
Hi everyone, I'm Sukirti. I hope you can hear me.
Yes, yes, go on.
Okay, so my question is, so basically we know that the Chinese yuan was added to the IMF basket earlier in 2016. This was to promote internationalization and use of the currency as a reserve currency. But the adoption has been poor so far. So my question here is that I understand that the ecosystem within China is very robust for a digital currency, but how does China as a country accept to promote cross-border payments and basically use of the digital yuan outside the borders of China? So yeah, that's the question.
Thank you, Shakruti. Anyone would like to answer her question?
That's a question for a lawyer.
I think they're two pretty, sorry, Charles, go on.
I was joking. I was saying it's a question for a lawyer, but Donald, you're very much involved in the China ecosystem, so go for it.
Well, maybe, I don't know, we got a lawyer on here also. Maybe we should defer to Pádraig. I think my own perspective is that these are two like extremely different topics, and you know the concept of internationalization of the RMB is something that I think is very different, as you rightly say, from domestic digital currency. In a way, and this kind of goes back to Charles's concept of programmable money. A digital currency can maybe lend itself to more efficacious capital controls, which I think is interesting. I think for a whole lot of different reasons, Chinese policymakers will move slowly to internationalize the RMB. I also think that, I mean, if you kind of think back to one of the comments I made at the very beginning of this discussion, I guess, people like to talk about reserve currencies, and I mean, over recent history, it is the case that the world seems to have moved from one reserve currency to another. replacing one currency hegemon with another. I guess that, you know, the hope one would have, I mean, you know, just switching from one currency hegemon to another currency hegemon doesn't really seem to address any of the quite clear imbalances that exist in an interconnected financial system where you have one dominant currency. So I guess that, I mean, I would hope that with digital currencies, we might be able to move to a systemic hegemon rather than a kind of a national hegemon. And it wouldn't surprise me to learn that China might be thinking that way over the long term. I don't know.
Thank you, Donald. So would you like to add on anything, Pádraig?
Except to contradict that it was a legal question. If you think of it in terms of capital controls and the reason why they're there, I don't think that necessarily the introduction of CBDC would immediately change that. But what you could possibly see, and it's less of an legal question and more of an economic question, is that if you have, or a political question, if you look at a global level where politics are moving in a situation where you have a divergence between almost needing to choose your global power, and within that there being a driver for maybe an accelerating or finding a way in which RMB as a currency or as a means of payment can be accepted and adopted without necessarily being reliant on clearing through a US banking system or by being benchmarked against a US dollar reserve currency, then there may be ways and means in which this would have a role to play in that.
Interesting. Thank you, Pádraig. So he comes to an interesting question. I think Charles will be the right person to answer. How would existing cryptocurrency affect the implementation and usage of CBDC? Charles?
That's a great question. I was asked earlier this week, someone asked me, do you prefer a stablecoin, privately issued, or a CBDC? And that's a great question because at the end we are in the business of finance. I guess this kind of central bank CBDCs will probably take over.
Charles, something wrong with your reception. We couldn't hear you. Can you repeat it?
Sure. So what I was mentioning, that's a very interesting question. So I believe the CBDCs are bringing more trust and are more trustable instruments, and they will get much more market tractions. So they will probably shadow a little bit the privately issued stablecoins by private companies because there is this trust factor. That means that if you own a CBDC against a digital US dollar issued by some companies, you will trust more a CBDC. So I think it's going to disrupt a little bit, but I guess the pie keeps growing. So it's going to grow for CBDCs, it's going to grow for privately owned stable coins also. I think there are use cases for this kind of forms of CBDCs, but the market has the answers and the users will make their decisions where they want to put their money. But it's very early days, so I think the pie will grow, but probably the CBDCs will get the most traction because they have this trust factor, which is simply critical.
Interesting. Thank you, Charles. I think that's really pretty much all the questions we have, and I also wanted to say one last time, thank you very much for everybody. So I actually wanted to ask each panelist one last comment or advice to all the audience tonight on CBDC. So what would that be? Starting from you, Donald.
Well, I hope everyone leaves with a sense of excitement at this topic, since I really do think, we do a lot of fintech panels on a lot of different topics, and people get excited about, Lemonade just went public, Policy Bazaar maybe going public, and people kind of get excited by day-to-day stock price movements. I really think that this concept is a concept that is just going to have sweeping implications for not only the way we transact with one another on a day-to-day basis, but a whole host of quite important systemic policy issues that I think are going to have tremendous ramifications for a really, really long period of time. So I hope everyone is excited by the topic, and I hope it's a topic that people spend more time talking about, because I feel like not enough attention is paid to this topic. And Bowie, that's one of the reasons I'm so glad you thought of this topic. So thank you.
Well, thank you for accepting my invitation, Donald. Thank you very much. How about you, Charles?
I would say everyone should be experimenting on CBDCs whenever they come to your reach. If you are a product builder, if you are a fintech, if you are a bank, don't be afraid of the learning curve. The soonest you start getting your hands on digital assets, on CBDCs, the sooner you will learn and the sooner you will start to implement. And when it comes to product design, I think everyone should be considering that not everyone has as much time and passion for the technology. So I hope CBDCs will blend into our life in a very smooth and elegant manner, so that people in a couple of years will be using CBDCs and benefit from all their features without even knowing, because everyone will have been on board on the journey and start the learning curve. And it's not very difficult, to be honest. So start building, do POCs, explore with professionals, and join this exciting journey.
Thank you, Charles. How about you, Pádraig?
I guess it's for the lawyer to sound a note of caution. I hope that as things progress, that there's a convergence in terms of the design features that people that are incorporated into CBDCs. If you look at the range of experimentation that's presently on the blocks, and with more to follow, the chances of there being systems that don't work together well, that there isn't a common protocol that people will subscribe to and will actually be effective to make the full effects, properly international, properly global. The chances of those types of issues arising are they're reasonable. I hope that doesn't occur, because I do believe in the huge advantage that might actually be gleaned from CBDC, and I would look forward to those positive attributes holding sway.
Thank you, Pádraig. And team?
Yeah, I think it is a very interesting topic, because it is a convergence of so many fields and domains. It started as, it represents a lot of deep technology underneath it, first of all, and then it touches on how you could create a viable, if it is the retail part, the viable internet, consumer internet adoption strategies. Then it goes into a central bank kind of monetary policy, really big macroeconomic consideration. And then finally, it could even become a, arms race or kind of, international political, geopolitical competition types of battlefield, potentially. So it really touches upon everything that you would hear the most in the news about, as one topic that could potentially covers all these angles. So that's number one. And then number two is, like I mentioned before, I think it is interesting now that you see a lot of governments or jurisdiction trying on this, and you got Libra in the private domain. So this thing has to be for real. I mean, as an idea, a lot of smart people has definitely thought a lot about it. It will be like .com era of the internet 1.0. Everybody racing to it, trying to figure out different business model, different ways to use it. 99% may fail, this may be the case here, but something like Amazon will grow out of it and then be here to stay. So I think that is a very interesting new era of technology and fintech in general.
Thank you, team. And once again, thank you all, everyone. Thank you, gentlemen, for joining our event tonight. And obviously, we wouldn't be able to pass or exchange our business card because this is not a physical event. So just for your convenience, I have created some QR code for, this is the QR code goes straight to our LinkedIn profile. So feel free to scan the QR code and get connected. I think for me, what I'm passionate about is education. So no matter what you do, you want to make a career move, you want to make an investment, or whatever you wanted to do before, you got to educate yourself first. So that's why I always enjoy conducting this type of educational talks. You know, knowledge is free. Everybody is, you know, willing. There's so much knowledge you actually can find online for free. And we have all these knowledgeable speakers to share their insights and knowledge. That's free. So once you have knowledge, you can always turn into skill set, and skill set will definitely bring you something valuable in future. So I thank you for everybody for joining me, and this is why I enjoy doing this type of session. So my next event, so this month I've conducted 2 events. I think it's a little bit too much, I think, to have 2 events per month. So I think I will, going forward, will do once a month. So this is my next event, which is August 18. Topic is harnessing blockchain technology for digital transformation. I have different speakers from Singapore and India, and also from Hong Kong. I'm also waiting for one more guest speaker to confirm. So if you would like to stay in touch, please scan this QR code to join the MaGESpire Blockchain Group committee, and you will be informed once all the events have been sent out. So, and I think that's all I have for now. But before I go, I think I like all the speakers to join my breakout room. I think we should speak for a few minutes before we go. So I think that's all, and the rest of the team can, the rest of the audience can exit. So let's see. I may create this breakout room.
Thank you, everyone, for attending. Thank you so much.
Thank you so much, everyone.
Thank you.
Thank you all. Are you able to join? Team, Donald?